What's up guys, Steelums here and welcome back to another video, man. In this video, we're gonna be discussing why trend lines don't work and why 95% of traders fail when trying to use a trend line. It's because they're not using it properly, and I'm gonna be discussing a couple quality points on how to properly use these trend lines and how to be able to read price action better when trying to use trend lines. Also, make sure you guys like and subscribe and turn on your notifications. I'm going to be uploading consistently Mondays and Fridays every single week. I have a lot of great videos coming out that could help you become a better and potentially profitable trader. So without further ado, let's hit the setups and I'll see you guys there. All right guys, we're here at the setup, and before we get started with live examples, I want to go over this PowerPoint, which will contain some key information regarding trend lines and some nuances of it. Ultimately, I want to help you guys create a blueprint to trading trend lines, which will be very beneficial to your trading. So what are trend lines? We're going to go over that, and then we're going to go over limitations of it, and then more importantly, we're going to go over market structure, which is the main aspect of trading trend lines, and then eventually we're going to shift in time frame. Then we'll hit the live charts. So what are trend lines, right? They're lines or curves in the chart giving a clear picture of the trend, right? I've seen a lot of people just use lines mostly because they mark the uptrend or downtrend, and it just guides price and helps determine the current direction in market price. It requires at least 2 to 3 points on the price chart. Now, to determine those 2 to 3 points, it depends on the type of trend it is. So an uptrend is when price is pushing higher and it's created by higher highs and higher lows. So when you're creating a trend line for an uptrend, you have to look for your higher lows here. So we see our higher low, higher low, higher low, and we have at least 3 higher lows here, which allows us to create this uptrend line. And so a downtrend is when price is pushing lower and created by lower highs and lower lows. So when price is creating these lower highs, so we have 4 lower highs here that was allowed us to create this downtrend. So that's how we create our trend lines. So now the limitations of trend lines. So a lot of people, right, they just take the break of a trend line and they wonder why it doesn't work. So the more often than not, you have to keep readjusting it depending on the time frame. So it might break your trend line, but it ends up pushing. So you have an uptrend line and it breaks your uptrend line, but then keeps pushing higher. So you end up readjusting it over and over again, and then wonder why it's not working. So the reason is taking a break of a trend line isn't always a high probability setup, right? Just because the trend line breaks doesn't mean price will move that way, right? Just because the uptrend line breaks doesn't mean price will have to drop lower. Or just because a downtrend line breaks doesn't mean price has to push higher. And we'll go over that just in a second, right? You're probably thinking, so why not? And we're gonna go over exactly why that doesn't occur. And so it's also subjective to the way they are drawn, right? Some people consider the wicks on the trend lines, some people consider the body closes. So it all depends on the trader, but there's one simple element that has to be consistent across the board. And so also it is mainly a guidance tool, and it's not literally a trading indicator. So just make sure you note that it's just a guidance tool. You don't place trades off of it. This is where it changes the entire playing field, right? You have to understand market structure when you're dealing with trend lines, right? It's not just a line on the chart. It has to do with marking market structure. So as we said previously, an uptrend is created by higher highs and higher lows. A downtrend is created by lower highs and lower lows. This is the most important part, right? A trend line uses these lows or highs to create a visualization for the trend, right? So an uptrend market structure break occurs when a higher low is taken out, right? So when price is creating higher lows, higher lows, higher lows, and that higher low is taken out, that's a market structure for an uptrend. A downtrend market structure break occurs when a lower high is taken out. So price creating lower highs, lower highs, lower highs, and once price aggressively, right, note that part, aggressively pushes past a certain level, past a certain lower high that is taken out, right, that's market structure break for downtrend. Price may break the uptrend, right, the line specifically, right, but not market structure, leading you to consistently readjusting your trend line. So just because the uptrend line breaks doesn't mean the trend has shifted, right? But when the market structure breaks, that's when the trend has shifted. For price to reverse, market structure has to shift or break, not just a trend line break, right? So there's 2 different things. You have your market structure breaks and you have your trend line breaks, right? Just because the trend line breaks doesn't mean the market structure broke. Remember, as we mentioned in the previous slide, it is mainly a guidance tool. It's just the line drawn on the chart. It is not a trading indicator. So now understanding time frames, right? So higher time frames are more reliable and powerful than intraday time frames, right? So when you have your monthly levels, monthly, weekly levels, right? Monthly, weekly, daily, right? Trend lines, these are examples of the higher time frame trends, right? So when these higher time frame trend, the market structure on these higher time frames break, that's your market structure break. When a lower time frame trend breaks, right, your downtrend or uptrend on an intraday level breaks, then that's just a shift. That's just a temporary shift. A total break is when a higher time frame breakout occurs, causing the price to move a certain way. So now let's go over the charts. So when we're looking here, so let's go over uptrends and then we're gonna go over downtrends, right? When we're looking at this chart here, we wanna identify our uptrend. Also, take a note that there's different factors that plays a role in, why price pushes lower, and it's not just strictly a trend break, right? There's different factors that applies to it. But for the simplicity purpose, we're just gonna cover trend lines alone and strictly that. So taking the information we learned on market structure, let's create a blueprint, right? So when price is in an uptrend, creates higher highs and higher lows, right? Higher highs and higher lows. Now we said that uptrend, right, is when price does this, right? Now a break of uptrend, right? A break of uptrend is played when a higher low gets taken out. So we have our higher low here, right? Now let's say price doesn't come for that higher low and ends up creating another higher low here. We can adjust our level and put it right beneath that. And once price breaks that is when your shift or break occurs. Now price can come retest this area, right? And you can have different entry mechanisms, but the point is price will most likely go take out the previous higher lows, right? That one, this one, right? That's our model here that we're using to understand how these breaks occur. You could just play the retest. There could be different entry mechanisms you could take in this, right? But the main concept here is that price breaking this higher low and then attacking these lows here. Now in a downtrend, right, lower lows and lower highs. So we see that price is creating lower lows and lower highs. Just a little nicer here, right? And so price created a lower high. So a shift in a downtrend would be the break of, right? A break of a lower high, right? So we have that lower high here. So when that break occurs is when we have a shift or break in structure, and you can have your entry mechanism here, and we can target the previous lower highs for our targets. Now, what a lot of people do is they make the mistake of, when price is just creating an uptrend here, right? So let's just move this out the way. When price is creating an uptrend here, right? They mark their lines, and then once price breaks that, they immediately go short and they get burned. Notice that price never ended up taking out a higher low for this uptrend. So you just end up readjusting it and be like, oh yeah, my previous trend line was wrong. This one's definitely gonna work a lot better. So it comes down here, it breaks it. You take your short position, and then you end up getting burned again until it does this and finally works out your way. And then you're confused as to why this worked and why this didn't, right? So you keep adjusting it, and you're like, oh, finally worked. Reason is you had your structure break, so you had a higher low break. So let's go over some examples now. Here, right? Let's erase these. Actually, we'll just keep it though. So here we see that our uptrend here, right? I'm gonna give the benefit of hindsight here, but overall you have to be able to see this. You have to be able to see this, right? You have to be able to see the entire setup form. You have to, again, a trend line is marked by 2 to 3 points. So if you don't see these 2 to 3 points, then you can't really trade anything. Now here's a perfect example of constantly adjusting your trend line, right? So here on this price action, we haven't seen this part develop, right? Let's say we're seeing this price develop and we haven't seen this part. So we're just gonna assume that this is our uptrend line, right? We're gonna assume that that is our uptrend line. And once price breaks it, we immediately go short, but then we're wondering why price didn't go our way. This is because an obvious higher low wasn't taken out here, right? So by obvious higher low, I'm talking about these higher low, right? So you end up adjusting your trend line to look like this, right? So you end up adjusting it and you're like, okay, the moment it breaks this time, I'm gonna take a short position. So you go short here and then you get burned again. And you're wondering why did it not work out? Because why? Our obvious higher low here, right? So our obvious higher low here didn't break once price pushed past this. So now price created another higher low that we can base our trade off of, right? So this is our higher low that we can base our trade off of. Higher low broke, and then you can take your entry mechanism and you target this low, right? So you can target this low here, this low, these lows here as well, right? And then, these smaller, higher lows here, and eventually these lows here as well, right? The price delivery on this wasn't the best, but nevertheless, it did deliver to your higher lows, right? And took your targets. So that's the main way to trade that, right? Follow the model perfectly and then give you your levels. Here's another example, right? We see that price is in this uptrend, right? So that price is an uptrend. Now, if it just breaks this uptrend line here, we can't just go short. Why? Because our recent higher low wasn't taken out. So it bounced up. In that bounce, it created another obvious higher low. So what did that set us up for? A trade entry. So once this higher low ended up breaking, it ended up pushing lower to our targets perfectly. This is our first target, right? Second, right? These relative equal lows here. Your third target, could be this gap fill, and your last target is down here, which price ended up delivering very nicely. So that's the main premise of it, right? You could have your entry mechanism anywhere around here, right? Depending on how you like to trade. You like to trade on a lower time frame, higher time frame, doesn't matter. This applies to all time frames. So let's go over NQ here, right? Let's go over some downtrend breaks. Here we see that price is in this downtrend, right? And it's creating these, right? We see our 2 to 3 points, right? That price created. And, we have our high, lower high, lower high, lower high, lower high, lower high, right? So price ended up breaking out. What did it break out of, right? So a downtrend breakout, right, will be a break of a lower high, right? So our lower high here was that level right there, because it went to it, it rejected it, ended up breaking out, candle close above it. You can have your entry mechanism, whatever you want it to be. We're not going to discuss entry mechanisms right now. We're just going to discuss market structure. And it ended up traveling to our targets, right? First target, second target, and then our third target's up here. That is also a target as well where you can take profits, but we're just going to contain this high. And then our next targets would have been this and these. F price decided to push higher, but ended up having a shift in structure on its own and then decided to reject off that. There's different ways to have your take profit levels taken, but more the most common would be just attacking these previous lower highs. Now let's go over another example, final example. I'm gonna keep this video short. because it's really as simple as this, right? Just understanding the shift in structures like that, it's fairly simple for the most part. There's different factors that tie into everything, of course, right? But for the most part, when your other analysis and other factors are lining up, a downtrend line, as simple as, a successful downtrend line break is as simple as, you have to play it with the market structure shift. You can't, or market structure break. You can't just do a trend line break. That doesn't work. That's pseudoscience, right? So, might offend a lot of people with saying, "Oh, trend lines don't work," but simplicity, trend lines don't actually work. They're just a tool to guide price and make your chart look pretty. So here we have our lower high, lower high, lower high, lower high. Even though it's not connected towards this downtrend line, it's still considered your lower high. So once price ended up breaking out of this lower high, you could wait for this trend line to break as well for extra confluence. So once it did that, it ended up rallying higher into our zone here, here, and here. Now again, there's different mechanisms to hold the trade longer, but for the most part, this downtrend broke and where all our targets got hit perfectly and delivered nicely. But that's about it, guys. I hope everyone learned something new from this video and enjoyed this video. If you guys have any suggestions on further videos, make sure to comment down below. Also, make sure to like and subscribe for new videos weekly. I'm going to be doing videos on Mondays and Fridays every week. So thank you guys for watching, and I'll see you guys in the next video. Peace out.